Welcome to Deal Nation. On the show today, we're joined by Zach Richards. Zach is the co-founder of REI Capital Guys. How are you, Zach?
Good. How are you? Thanks. I'm excited to be here.
Yeah, I'm great. Happy to have you on. What you guys have a really unique business in which you enable people, investors, to both build their personal wealth and also access capital to scale their businesses. So it's kind of a 1-2 punch for them to really increase wealth and stability in their lives, which is great. And we're gonna get deep into exactly what you guys do and how they can get involved with you and your company. But we want to find out a little bit more about you first. I mean, I think I read that you live on a 40-acre farm out in New Hampshire. So tell us a little bit about you personally, and then we'll get into the business.
Sure. So yeah, my wife and I live on 40 acres in New Hampshire. It's not a farm yet. It's all woods, but we've been working on getting a lot of the woods cleared and, putting in a field and stuff. That's been my project so far for this year, this summer. So yeah, my wife and I live up in New Hampshire. My background before I started private lending was in software development. I was a software engineer for about 10 years. And then always been interested in real estate investing, and I started off with buying a duplex in 2019, and my plan was to kind of keep doing that, buying more rentals and as it went. And then the house behind me where we lived ended up getting bought by a flipper, and I was just curious, like what happened, who bought it. So I was looking through some of the records, and then I found that they borrowed the money from a private lender, from a person. And I had always heard about it, and I thought it was something that you needed, millions of dollars to do. But I looked that the money that they borrowed was $100,000. And I said, okay, that's like within reason for what I can do. And so then I started, going down that rabbit hole of what exactly was private lending. And then this was during 2020 when everybody was working from home. And so I had more time on my hands. I was kind of bored and wanted to get a project to do. And then I started off just doing a couple of loans with my own money, kind of one at a time. And then from there, friends and family were interested in what I was doing and asking about how it worked and if they could park some money with me to get a return on their capital backed by real estate. And I said, sure, let me figure out exactly how to do that side of things from a legal standpoint of taking other people's money. So I ended up finding an attorney and getting all of that put together, and then started taking on money from friends and family. And then from there, it kind of just grew over the last 5 years. And I never thought that that's where it was going to go when I first started. So it's been an exciting ride.
What was your motivation when you saw that opportunity to essentially be the bank and early stage, or you're not opening up a shop, but you're just kind of experimenting with the business model? Was your motivation to have an income vehicle that was as passive as possible, or did you just see it as something that could potentially be scalable if it worked?
So I didn't see it as scalable at the very beginning. Originally, it was something passive. Like I had some cash sitting around and I kind of wanted to keep it sitting around just in case, because, right back in 2020, things were pretty uncertain. So
Sure.
I was like, okay, maybe I can lend it out. It's short term. I've got a mortgage on the property. It's backed by real estate. And in 6 months or so, this money's going to come back. It'll be cash again if I need to do something with it or whatever. So it kind of started there. And then as I started doing it, I found another podcast about lending and a couple of books. And then I realized that, wow, there are actually people that do this and scale it. And then it kind of took me down that path.
Is it a little nerve-wracking making that initial leap when you're taking your own money? You're not using other people's money at this point, but actually kind of, literally being the bank yourself. Was it a little nerve-wracking, or did you see it enough as a workable model that you weren't worried?
So it was both. I saw it as a workable model. I knew people that did it. And the first loan I ever did was nerve-wracking. And what was funny is it was somebody local to me. The property was walkable from my house. It was somebody who had done at least a dozen flips in the past year. They were buying the property for something like $170,000. They were going to put the rehab money in all themselves, and they just wanted to borrow $100 from me. So like going back on it, absolute slam dunk of a deal that I would do every single day of the week. But at the time, I was like, I'm going to give this guy $100,000 and I'm never going to see it again, which of course I had all the documents, my attorney put everything together, but just at the time it was a little bit nerve wracking. Sure. But then, after I've done more, it's just gotten a lot more comfortable. But at the time I had not second thoughts, but I really thought through what I was trying to do here.
No, I mean, I think that's only natural, if like if you take $100,000 and you put it towards, a fix and flip property, you can touch your hand to that property. Like you can
Yes.
say like this, the value is in this thing that I own, right? Whereas when you're lending out money like that, like, yeah, the return is great. The money comes back in 6 months, like you said, but until you have that proof of concept, that's got to be a little bit
Yeah.
6 months of nail biting, right? I
And
think
that's
that's
a
just
great point, right? You get the property when you buy the property, but when you do a loan, all you get a couple days later in the mail via FedEx, you get a big envelope with all the documents. That's all I've got
yeah.
is this big stack of paper that says this guy owes me 100 grand.
Yeah, exactly. But it's a wonderful thing about the real estate investing industry. Like I understand that somebody who's not involved in real estate investing would say, well, that's a pretty high risk venture, right? Whereas once you really get to know the real estate investing industry, you understand how much of a help each other succeed community it is. Right. And so the whole community is based on relationships. Like if you are a wholesaler, you really need to have good relationships with the fix and flippers or the end buyers for your property, and you need to have kind of a trust factor between them. If you are fixing and flipping houses and you want to scale up, you obviously you're going to need access to money, and there are, as you said, like there's a proven model for short-term lending that allows them to get those projects done. And so it is really a locked in community. So and once you know that, then I think it helps the trust factor go up significantly.
Yeah, it absolutely does. It's all about relationships. Like the guy that I did that first loan to, I've lent to him then, no, probably 10 other times since then. And other people that I've lent to multiple times. And yeah, the relationship is huge. I love, at the end of the project, they tell me how much money they ended up making. It's great. They make money, we make money. And then with people that we've lent to multiple times, it makes it so much easier. They'll text us the address of a property, what they're buying it for. We still obviously look at the details, but you know that if a good person that you've already worked with brings you a deal, it's going to be a good deal.
And were you? I mean, we'll get into your core audience in a minute, but like when you were first starting off, that were you lending exclusively in single family homes? Was it some multifamily or commercial land even, or was it all in single family?
So it's definitely started with all single family. I'm trying to think back on it. And I think the first probably 10 or 20 loans I did were either single families or duplexes. And partially because that was just, the environment I was around and the people that I knew. And also with the amount of money that I had to lend, I wasn't in a position to lend on a 40 unit multifamily. It just wasn't going to work. So the
Sure.
single families, and especially my local market, is really what I started with. And that gave me a comfort level for the model and how it all worked.
And are you lending at this point? Are you lending to anybody that's in land acquisitions?
We have not done just a pure land loan yet, but we will. We've had a number come to us. People have brought them to us, but they haven't, gone forward for whatever reason, with people that ask us if that's something that we would do. And yes, it definitely
Okay.
is.
Okay, cool. Yeah, because I know that there's a big demand for that. That's a an area where leveraging other people's money is really important. I was going to tease you about your 40 acres. I was like, say if you want to sell 20 of that, I know a lot of people that will give you 40% of value for it.
Yeah. I get letters in the mail all the time of people that want to buy my land
Oh,
for less than I paid for it.
I bet you do. But the business model works. There are people
Yeah.
that do want that cash in a short span of time, and so play the numbers game.
Yes,
But
it
yeah, in that
absolutely
industry,
does.
obviously, it's a perfect example of where when you're doing a volume of deals, you can't possibly scale a huge volume of deals unless you have access to other people's money. And going to there are people I know that lend through banks, but like it's there's a bureaucracy behind that you guys just don't necessarily have, which is a benefit, I think.
Yeah, huge. Like one of the most common questions I get from prospective investors when they want to, join our community and give us capital is, "Oh, you must be doing risky loans to risky borrowers if you're able to charge more than the banks." And then you have to explain the whole thing that like, no, that's not further from the truth. These are just experienced real estate investors that do a lot of deals, and they are willing to pay more for the speed and for not having to go through all of that process that you do when you get a loan from a bank. Like anybody that's got a mortgage on their own house realizes what a pain it is. If you're doing that once a month or a couple times a month, you just can't.
Yeah, and it's not, there's a big difference between, taking out a 30-year loan with interest in order to acquire an asset versus having an asset that you're going to use as a profit vehicle, and you're going to gain that profit in anywhere from 90 days to 6 months, right?
Yeah, exactly.
All right, so for everyone listening, before we really get into it, for what you guys do and what the fund is, give us kind of the elevator pitch. What's the short version of what you guys offer?
For investors.
Well, just in general, right? And then
Okay,
we'll dissect it for investors after that, but just as a
sure.
general.
Yeah, so what we do is we help members of our investor community get passive returns on their money backed by real estate. So we do short-term loans to real estate investors, primarily people fixing and flipping properties, but as we discussed, other asset classes as well. And then our investors get paid monthly on their money, and the rate of return that they receive is based on how much money they invest with us.
Okay. And so, basically if we're looking at this kind of as a two-way funnel, or funnel up, I suppose, you've got on one side, you've got the investors, fix and flippers specifically for the most part, that are coming to you. They need access to cash so that they can turn over that volume of properties, like we're saying, right? So this gives them on one side the ability to scale via the funds that you guys make available. And because of that kind of that lending system where money is being invested into very high value uh, real estate properties, and that's happening continuously, that gives people on the other side of the funnel the ability to park some money into that bank, knowing that that bank is going to be spending that money towards really high value real estate, and that creates a space of safety for that money. Is that about right?
That's exactly right.
Okay. So when you for people that are looking to, because we've got our audience, the people listening, typically tend to be investors themselves, right? And so they are either running wholesaling deals, or maybe have a more diverse portfolio, where they might be looking to build up a more diverse portfolio, and might actually need access to some of that capital themselves. So there's an opportunity for them to loan through you guys, to leverage that cash. But then we also have people listening that are circling real estate investment, right? So they haven't done a wholesaling deal. They haven't decided if they have the time. They haven't even decided if this is the vehicle for them to be entrepreneurs, but they like the idea of investing in real estate. And so this sounds like it could be a very sort of safe, small step forward into real estate.
Yeah, I think so. I mean, that's really what guided me here too, because like I mentioned how I had a duplex and I was going to, keep doing that. We ended up having one of the tenants, when our inherited tenant moved out, we got a new one, and she turned into an absolute nightmare. I ended up having to evict her, and oh God, with her literally living above us, because it was a duplex, we lived downstairs.
Oh,
It was a
yeah.
nightmare. And so that just reinforced to me, like, okay, I'm the bank, I'm lending on this property. We have insurance against it where we're named as the mortgagee. And literally, if it burns to the ground, we will be covered by insurance. And I don't need to get a phone call about it overnight. Whereas if I
Yeah.
owned the property, I would be hearing about it. So that's kind of really what solidified me into thinking that lending was the way to go.
No, that's fair. I mean, the no tenants, no toilets idea, like there's a reason why that catchphrase is known. A
Yes.
lot of people
Yes.
want to avoid that. Um, so for you guys, to be the bank, or for those people that are just they want to put money into the fund. Can you kind of go through what that process looks like if somebody is, they're sitting on some capital, say, 25, $50,000, and they're looking for another way to kind of safely invest. Can you kind of walk through that side of it?
Sure. So on the fund side, our fund is a 506c fund through the SEC, which for anybody that's not familiar, it means that you do need to be an accredited investor through the SEC's definition, which really quickly means you need to have annual income of 200,000 a year over the last 2 years, or 300,000 if you're married, or your net worth is $1 million excluding your primary residence. So the first step for prospective investors is to get a letter. You can do it. There are a couple companies that do it, or we have also templates that if you want to have your CPA or attorney fill it out and send it back to us, they can do that. So you get a letter that says you're accredited, and then we will explain everything about the fund, how it works. We've got a number of documents about that, and then we have the documents signed via DocuSign, and then our investors wire the money to our fund, and then they start earning interest literally the day that their wire hits our bank account.
So I think some people that are, maybe that not up to the of the space of accredited investors, or maybe they're edging towards that, they're probably quite familiar with what a REIT is. So how does this compare to a REIT in terms of structure and returns?
So yeah, my understanding with a REIT, and I'm no expert, is they own underlying real estate. They'll buy like malls or apartment buildings, whatever, things like that. And then I know they have to return a certain amount of capital that they earn to their investors in a specific time period, like a percentage, to stay classified as a REIT. And I know most of them are publicly traded. So we're I guess similar in that respect, that it's a hands-off real estate investment, but with a REIT where you're actually owning, I guess indirectly, underlying real estate. With the fund, what you are doing is you are participating in the pool of loans that we originate. So you're diversified across the entire loan portfolio that we have.
Okay. If and this is you guys look at this really as a long-term investment vehicle, right?
Correct. So we don't technically in our fund have a lockup. Like a lot of funds will have you have to commit your capital for 2 years, 5 years, whatever.
Mm-hmm.
Our documents just ask for a 90 days notice for return of your capital. And that's because when people give us money, we don't just sit on it in cash. We need to lend it out. So 90 days notice gives us plenty of time to, see which payoffs we've got coming in and money coming back and all of that. So I personally view it as a long-term play, because if you do the math on earning between 7 to 10% over a very long period of time, the amount of wealth that you accumulate is astronomical. And especially with the investors that we have that use their retirement accounts, it's really powerful, because we have a number of investors with self-directed IRAs, and they're still working and they don't need the money yet. So they place it with us, and then it will compound. Each month they reinvest their distributions, and they don't have the volatility of the stock market.
So technically, if as an investor I come in and I've got some extra capital, right? But I'm also actively doing projects. So I could conceivably invest $100,000 into the fund. How much would I earn in monthly income on that, dividends, even if I'm like just directly reinvesting them and letting it compound? More or less, what would I be looking at $100,000?
So for our tiers, our minimum on our fund is 25,000, and that tier earns 7%. So on $100,000, you would earn 7%. It's an annual rate, but we do monthly payments to our investors.
Okay. So the monthly payments are like $500, $600,
Yeah, I
something
think
like
it's
that.
$583 or something like that. Yeah.
Okay. So, I could conceivably put $100,000 into the fund, be getting, $600 a month paid out monthly. But then I could also, while my money is sitting in the fund, I could borrow money for a fix and flip that I want to do. And then be able to create profit for my business off of what I've borrowed. So while I'm earning money through the fund, I'm in some ways kind of supplementing what I need to pay off on the loan because I'm generating income from that money sitting in the fund. So it's sort of a full circle thing, right? And I sell the fix and flip property, and then I take some of the profits from that, put them back into the fund, earn more. So it's kind of a way to continually fuel your projects.
Yeah, that's true. And because we do actually have somebody who borrowed money on a flip right now that they're actually selling next week. And she reached out to me last week and like her husband was interested in the other side of things of like, well, how does it work if we place money? And then she was talking about it with her parents and her in-laws to, pass them some more information. So yes, we've had people that have kind of done both sides of it at the same time.
Yeah, it's interesting. It's kind of like borrowing your own money in a way, right?
Yeah, it effectively is. Yeah.
Yeah. In terms of it, in terms of protections, because I know that there's a lot of, we started off talking about making the leap and having a bit of concern about where your money's parked or going. What kind of protections are in place? I know, I think you mentioned a little bit, but just kind of to clarify for people, like, put $100,000 in. How is my money, protected, insured, etc.?
Sure. So there are a few main ways that we do it. The first way that's the most important is conservative underwriting. So we will never lend 100% of the property's value. We typically max our loan amounts out at between 65 and 70% of the ARV of the property. So that gives us 30 or 35% of an equity cushion where if something goes wrong, if we have to foreclose and attorney's fees and default interest and all of that, we have enough equity there to recoup what we're owed. So the ARV with conservative underwriting, that's the first one. Then next, we always also require our borrower clients to put skin in the game. So they'll either do a down payment on the flip, or what we will also do is what's called cross-collateral, where if they own another piece of real estate, we can put a mortgage on that property if there's enough equity. And that, gives us additional collateral where we can, provide 100% financing because we've got the collateral. So it's always about an equity buffer on the loan. And then we have our attorney prepares the loan documents on every single deal that we do. And yes, for a lot of them, it's filling the blanks in on templates, but we have found that the peace of mind of having our attorney review the title documents, prepare the mortgage, everything, all the documents that we have really helps to make sure that, that's another safeguard that we've got where, we're not filling documents and we have an attorney that does private lending do this for us. Then we get insurance on the property. So we have insurance for if it, burns down or whatever, like hazard insurance on the property. But then we also get title insurance as the lender. So if it comes up that there's a defect in the title, there's a mortgage that is ahead of ours that the title company didn't find or whatever, we've got a title policy as well that protects our capital.
Okay. And then for the projects that the fund is investing in, basically, are you guys taking on projects nationwide? Do you have a few kind of core markets where a lot of the investment properties are centered?
So we will lend in a lot of different states. We don't lend in the states that require a license to be a private lender, which there's 11 of them. We do a lot of loans in New England, Florida, Ohio, Missouri. We've lent in Pennsylvania, West Virginia. So we've lent in a lot of different states. we don't have like a core focus. I would really say what we're really about is the person that we're lending to and their experience and their track record. So the attorney that we work with can do documents in a lot of different states. So we like states where it's a little bit more favorable to be a lender. So we avoid, California for obvious reasons, but most other states are pretty friendly to lenders.
And if someone is in on the fund side, do they have any visibility into what individual properties are being invested in, or is it more intended as a passive vehicle for money earnings?
So it's definitely a passive vehicle where their money is not tied to any specific project. It's across the whole portfolio. But that said, we do provide updates and case studies. Everybody loves to see photos of the properties before and after and see what their money has been going into. So we do share that kind of information. Yes.
Okay, that's great. As far as again on the fund side, once somebody's invested, say like 25K or 50K as a baseline, it is is it always in tiers of 25K, 50K, 100K, or is there more of a once you're in sort of a drip system, like a monthly contribution of 2.5K every month to equal a yearly contribution of 25?
So it depends. We've had people that want to do something like that, and we are more than happy to accommodate that. And it depends. And the tiers, the way it works is it's with the rate of return. So 25,000, you get 7%, 250 is 8%, 500 is 9%, and $1 million is 10%. So if you invest additional capital and you tip over into the next tier, so to speak, you start earning that higher percent on the whole thing. So you'd get 8% on 250, for example, not just the amount over 50 grand. So it just makes it easier, and it's a little bit more favorable to our investors as well. And we'll also say, if a husband gives us money from their IRA and a wife does too, we combine those amounts when it comes to figuring out the rate of return.
Okay. What's the process for? Let's start with the fund side and then pivot to the lend side. If somebody wants to work with you, they want to actually contribute some money to the fund. What's the get started path?
Sure. So we did talk about a little bit of like the technical process with the accreditation letter and all that, but moreover, before we even get there, we always like to have a call, whether it's Zoom or whatever, with anybody that's interested in this, because we want to make sure that it's a good fit for anybody who wants to do this, because it's really, it's something more hands off. It's boring. Like if you're looking for, getting 20-30%, returns on your money, this just isn't the vehicle to do it. So the first thing is definitely we want to have a call and just understand, your goals and what you're looking for. And then we can see if this type of investment is a fit. And then if it is, like I mentioned, then we have the accreditation letter and then signing the fund documents.
Okay, great. That makes sense. And then on the lending side, what's the process look like there?
Sure. So yeah, anybody that wants to come to us with a project, we do something similar where we want to talk on Zoom, because we want to get to know the people that we're lending to. And also we want to just explain that, if you're looking for a nationwide hard money lender that's going to give you the absolute cheapest capital, we are not that. We focus on relationships and speed. I've had somebody reach out to me. This was a year or two ago. It was literally the Wednesday before Thanksgiving. She needed to close the following Monday, and her hard money lender that she was working with completely dropped the ball on it and being able to close. So we closed that loan in a couple of days over a long weekend. So for us, it's all about the relationship. So we want to get a feel for anybody with their real estate experience, what types of projects they do. And then we do, collect the operating agreements for their entities and that kind of thing. And our attorney goes through that. And then we will look at a deal on a case-by-case basis. So we've had a lot of people reach out and say, I don't have a deal right now, but I want to just start that relationship, because then that gives us the ability to close a deal in a day or two if we already have that existing relationship.
No, I love that. I would want to know, putting money in on the funding side, that you're vetting the hell out of anybody on the
Exactly.
lending side, right? Because you want to be investing in really quality projects. And then, of course, anybody that's has one quality project, most likely, you've got a relationship for years of them continually adding projects and continually wanting to leverage, other people's money, your money in particular, to fund those deals. So I'm assuming we already talked a little bit about the guy that you first loaned money to. I think you've done how many projects with that particular lender?
Oh, probably upwards of 10. I think it's been more
Upwards
than
of
10.
10. And I'm sure you've got a lot of use case stories of people that are just repeat customers that are coming back and just using you guys as a backbone lender for their business.
Yes, exactly. And like that one I just talked about, where it was the one over Thanksgiving. Ever since then, she has come to me for every single flip she's done. So even just the fact that we built that relationship and helped her out that one time, now she comes to us for every deal, because she knows that we can get it done and that we're not going to drop the ball in the last minute on it.
Yeah. I mean, and on the lending side, that is the portfolio, right? And so, we talked a little bit about, lending towards land, or maybe kind of expanding even more outside of single family home. So what do you guys see as, the near future of the portfolio? And then what's kind of your end goal for where, if you have a cap of like where you would cap it as your kind of resting spot for the portfolio?
Sure. So in the near term, we've seen like the market kind of shifting over the last couple of years, and we've done a lot more loans to more experienced real estate investors. So we definitely do, the single family loan fix and flips all the time, but we've done a lot of loans on multifamilies. And like what I was talking about before with the cross collateral, we have a lot of people that have multifamilies that they've bought, 5 years ago or so, and it's been a double-edged sword where they've appreciated a lot, yet the loan amount, the interest rate that they have on their mortgages on those properties is so low. So they have like a huge amount of equity that's dead in the property. And traditionally, in order to get access to it, they'd have to do a cash out refinance and get that higher rate mortgage. So we've done a lot of loans recently where people are buying multifamilies, and maybe they were going to do a syndication of 500,000 or $1 million, and doing a syndication for a deal that small is difficult just in the attorney's fees and all of that. So we've done a lot of loans where it's like, here, let's leverage a lot of this equity that you've got in these properties, and we'll put liens on them, and we'll be safe from our side. And now you don't have to go out and raise a bunch of capital. You don't have to split the return with limited partners and whatever. So that's kind of what shifted that way. And it's been good on both sides, because we get to work with, really sophisticated clients that understand how this works. You're not working with, somebody's first flip every single time, which is just a little bit more hands-on.
And you guys are able to add higher value properties to the portfolio, which, obviously has a solid impact for the people on the funding side.
Yes. Yep. Exactly.
Yeah. Okay, cool. What did I miss? I hit you with quite a few questions, but what did I miss? What else should people know about, either side of the business coming in?
That's a great question. Yeah, I think, for anybody that's considering, investing in an opportunity like this, I think it's really important to, like, the questions you ask are great, of like, how do you, like, when we talk to people, most of the times, like for the really sophisticated investors we speak with, the first 95% of the conversation is, how are you going to protect my money? And I think those are like really important questions to ask, because if you understand the downside risk, then when it gets to the rate of return part of the conversation, that's a much easier question, because if you're going to get a 30% return on your money, what does that matter if then you're going to lose it? Right. So
Yeah.
I think that like, it's something we definitely talked about, but for anybody that's, considering something like this, I think really understanding the how your money is protected is really important. And then on the borrowing side, something again, like we talked about, but I think just building that relationship ahead of time with any lender that you're considering working with is really important. Like, we have people that use us as backup lenders, and we are totally okay with that. But we still have people that, they want that relationship, and then they understand that if they need to come to us, that we can still, get their deal done. So I think it's really important as a real estate investor to not be transactional about the lenders that you're working with. Like, we're not, when you come to us to borrow, you talk to me or you talk to my partner. You're not going to a processing committee and then an underwriting committee who's reviewing your documents, and they're going to get back to you within 3 to 5 business days and ask you for a bunch of other stuff that you've already provided and whatever. So I think it's just really understanding, like, there's value in the relationship on both sides. Like, for us having repeat clients, and then for a real estate investor having a private lender that they can count on. So if you're working with a private lender, I think it's important to interview them as well about how they fund deals and how they look at things and how their companies are set up, because a lot of private lenders call themselves private lenders, and then what they actually do is they sell their loans to Wall Street. So they have, guidelines set by these institutions that they can have their terms changing on them in the last minute.
Yeah, I think that's I like that you mentioned, like, don't be transactional about this, right? Because the getting the best possible, like, deal, so to speak, on a loan is not how you build a partnership structure for your business, right? If you're going to do one fix and flip, fine. But if you have the idea of buying multiple properties every year in and year out, and adding to that the number of properties that you buy every year, you need to have very consistent, trusted lending in place. You don't want to have to go through a vendor vetting process for every property. That's gonna crush your time, and it's gonna increase your risk tenfold, right? So having, like, a plug-in partner that you can have for your business, and you have that trusted lending, and that's just part of automation, and it's part of risk reduction for your business. So I think it's very, very good advice to look for a long-term partner, not a quick solution.
Yes, and I think you got to put if you're worried about or trying to find the cheapest price, put it into perspective. Like, we've had people that arguing with us over a half a point or a point, and, like, you're going to make $100,000 on this flip, and you're trying to argue with us about $2,000 or whatever. And it's like,
right.
I don't have time for that conversation. I just can't do it. And it's, just put it into perspective for sure.
Yeah. So what's the best way for people to get a hold of you guys? We're going to put everything into the show notes below. So anybody listening, just, check the episode description, and we'll have, any links needed to get to Zach and his team.
Sure. Yeah. So I'm most active on Facebook. Zachary Richards is my Facebook, and I'm, like you said, we'll put a link to my profile there. And then our website on the fund side is REI Capital Guys community.com, and there's information about how our fund works and a link to book a call with us. You can reach out. And then on the borrower side, if you're looking more as a real estate investor, our website is reicapitalguys.com.
Okay, perfect. We're going to have all of that in the show notes. I really appreciate you coming on. I think that this is, like I said, a couple of pipelines that people listening can take advantage of. So definitely, I definitely suggest everybody reach out, get in touch, and at least have a discovery conversation with you guys.
Yes, happy to. Thanks for having me. I really appreciate it.
Yeah, absolutely. Our pleasure. All right. Thanks, Ed.